Hello, everybody. Anthony Garcia with Traders Ultimate Edge here. Let's look at what happened Friday and where we're going this next week. And I think both of those questions are the same answer. So here is SPY. I know I don't normally use SPY, but it's a really good illustration in this case. We see it did have a bounce here down near the 100 EMA and SMA. They're both right here. This trend line goes all the way back to just post coronavirus. It's a different one than on the ES chart, but you can see it definitely gets followed a bit. There's also another one that's slightly higher, but this one I felt was more important. Let's zoom all the way out. These. See, it comes from right there to right there. So it's only had a few hits, but I think this one is a pretty important line. We definitely want to see it not fall below that one. So it didn't in this little pullback. It didn't in the pullback in October, and that's where it made that bottom right there. So all right. This is where we're looking at right here. Now, prior to the close, which we are going to discuss in just a moment, prior to the close, this looked terrible because it was down here. It was like at the dead bottom. Um, and that big red engulfing candle without a wick on it, good Lord, that is bearish. That is bearish. Now, the entire day, we're going to go to the ES now. The entire day here, it just sold off pretty much the entire day. And the reasoning, oops, I'm sorry. Let me zoom out a little bit. The reasoning here and what I've seen over the past several days. And there was some commentary to the same effect that was dropped in our Discord. And honestly, I can't remember who said it, but I wholeheartedly agree. And I wish I could give them credit, but I don't remember who it was. Said this, and that all of the movements this week was retail trading. It wasn't big funds. And I agree with that. For the most part, right? Big funds weren't making distribution and allocation in the big funds that they manage. Yes, hedge funds were in here day trading and stuff, but it wasn't mutual funds accumulating or selling. So this sell-off right here, I think, was just like a giant risk off by retail going into the weekend. I think this was probably finally our capitulation. This is where retail is terrified out of their minds and they are selling their entire retirement accounts, and that's what happened. I think that's a lot of the downward movement that we saw this week was literally retail selling their whole account. I watch a lot of the Twitterverse and a lot of like stock twits and stuff. Not for investment advice, for the love of God. Do not get your investment advice from stock twits. But I like to watch it to see what the average person thinks. And the reason for that is that the average person is almost always dead wrong. That's the same reason why hedge funds buy order flow data from companies like Robinhood. If you ever wondered why they do that, it's because the average person is wrong. They want to know what the average person is trading. All right. So we had this big pullback right here. Everybody's scared out of their mind. They think Omicron is literally going to be the stand from Stephen King, and it just crashes, right? And that's, I think, what we were seeing on Friday. Now, if you've been listening to us for the last 2 weeks, or you've been one of my clients, we've been keeping very close attention on the news. I just did another search earlier today, and now I am finally seeing a change in social media sentiment. More people realizing that this is actually pretty mild. There are still, and this was a WHO quote from a WHO spokesman as of yesterday, I think it was, there are still no reported deaths. Still no reported deaths from Omicron. All of the news out of South Africa, hospitalization rate is much lower. Hospital stays for anybody that goes in the hospital is much shorter, and this is much less severity, which is very good. Because given its higher transmissibility and less severity, again, we've said this multiple times, it can push Delta out of the picture, and we will reduce COVID to, a minor yearly annoyance, kind of like influenza, right? Yes, it can still kill people, but it's much less deadly than statistically speaking than it has been, right? So it's actually a really good thing, the Omicron variant, and that's what we've been talking about. And more people are starting to get a handle on that. I'm now seeing news stories from news companies. I'm not trying to be political here, but it's the truth, and we have to understand this and how it affects the markets. News companies that were probably some of the biggest fear mongers out there are starting to realize, hey, the symptoms are actually mild. We're seeing from various places, and that is being reflected in social media sentiment. So, we've been looking at this whole thing, saying to ourselves, this is a giant and massive overreaction because we paid attention to fundamentals, right? Trader's Ultimate Edge paid attention to the fundamentals, and that's where we're at. That's why we've been taking long trades. And let me show you what happened at the very end of the day. Now, remember I was telling you this sell-off, I think, was mostly retail. We haven't really seen a whole lot of institutional buying yet. They were kind of waiting. I think. And then something really interesting happened at my time, 13:49, okay, Mountain Standard Time. So this is 11 minutes prior to the market close. 11 minutes prior to the market close, something happened. All right. Let's go over here. Over here, look at our put call index. Look at it. See how high the put call ratio is? Look at that. Look, this is coronavirus. It's the highest it's been since coronavirus. If you know anything about the put call index, you'll know the higher it goes, the higher chance of a rebound in the markets. This is obscene. This I think is a glitch. I think it is anyway. This right here, this is pure and sheer panic and terror. That's all this is. So we look over here. This is the chart I want to take your attention to. This is SPY V divided into SPY G. TradingView has the ability to do this. You type it in just like that, SPY V divided into SPY G. You can also do it the other way around, G divided into V. And what those are is the SPY value stocks and the SPY growth stocks. So when this chart moves up, that means value is doing well. When it falls, that means growth is doing well. Over the last several days, value has been doing better. That's because going into people perceived that this was going to be a more dangerous and volatile time. The markets may pull back, so they start to buy value stocks. They buy defensive stocks. They buy utilities and consumer staples. They buy things that good old reliables, right? They ditch Amazon. They ditch Nvidia. They buy good old reliable whoever, But look at a long timeline of this thing. I want to show you a long timeline of this thing. Where is it? There we go. So for a while now, back to like 2017 here, and it goes back a bit further, financial crisis, etc. It's been falling. That's because growth has outperformed value now for about the last decade. Growth has been outperforming value. It's not to say value is not good investments, and in fact, most of my investments are value, but I'm very picky about what I buy. Very, very picky. Anyway, the natural movement of this thing is downward, which means growth outperforms value, right? So last few days, people are risking off. They're moving their investments. They're going into value, and they're going into treasuries. Look at the treasury yields. This is November 24 right here. Straight down. This is the 10-year treasury yield. When yields drop, that means people are accumulating treasuries. They're buying more treasuries, and the yields drop because they're in demand, right? So this is what people were doing. They were going into safe havens. Okay? I don't think really any of this was big money. And look what happened right at the end of the day. I marked that spot again, 13:49. Very end of the day. Whoosh. Straight down. And this means growth got bought like crazy at the very end of the day. Okay? Now remember, growth has been being deaccumulated for a while. Deaccumulated? It's being sold off for a while. So the prices were cheap. The very end of the day, all of a sudden growth gets bought. You know who does stuff at the very end of the day? Big money. Amateurs open, professionals close. And the reason big money comes in at the end of the day is because they don't want to tip their hat. They'll wait to the end of the day. They don't mind, especially if it's at lows. They're happy about that. That's when they come in and buy. See this? Now, let's go look at Amazon. Here's the very end of the day on Amazon. Look, 1349 shoots through the roof. Okay? Look at Amazon. Look at this 15-minute chart. All right. Here's where the worry started, right? It was November. It's like Wednesday they started talking about it. It's like the 24th. Yeah, right around here. Amazon starts to sell off. Guys and girls, who's going to be a big winner in coronavirus lockdowns? Who's going to be the winner? Amazon. Where does everybody buy their stuff from online? Amazon. Who's selling this? People who are dumping the mutual funds in their 401ks and retirement accounts indiscriminately. Okay? Most owners of Amazon are institutions. They own it in their own funds and they own it in funds for clients. The big mutual funds are generally the ones that buy Amazon just because the price is so high. It's $3,400 a share. That's not to say that individual owners don't own it. I have a little bit, but most of the holders in Amazon are institutional, and you can go look that up. It's something ridiculous, like 99% are institutional. So all of this selling was people dumping their retirement accounts. Okay? This is all dumping retirement accounts because it's indiscriminate. Now, anybody, if you are concerned about COVID and you have two stocks that you're looking at, you have Amazon and you have Disney. Which of those two are you going to drop? Probably going to drop Disney because Disney, it makes a lot of its money through its theme parks. Or say you have any company that makes its money from people being out and about. Oil, for example. Oil pulls back on fears of lower demand. Okay? Those all make sense. Those all have fundamental reasons to drop them. Amazon mostly being contained in mutual funds. Mutual funds aren't going to sell it. They understand what's going to happen in a COVID pullback. They aren't going to sell it. So all of this was indiscriminate mutual fund selling by retail in their retirement accounts. My thought anyway. Right at the end of the day. See this pop? This wasn't retail. This wasn't retail buying their retirement mutual funds back. You can't do it that fast. Mutual funds, you have to do them overnight, usually, to buy them, right? You can't buy them intraday. They have to settle. Okay, this was big money. The volume that came in right here. 1,000, 8,000, look, 24,000 shares right at the end. 20,000, 20,000 shares, 22,000 shares. Right before the bell, 41,000 shares. Dude, who can afford 41,000 shares? Yeah, big money. That's who. Big money bought the crap out of this thing at the end of the day because retail had drove it down this low. That's what happened. This right here, Amazon and the SPY V, SPY G is the smoking gun of big money stepping in here at the end of the day and driving this up. Because big money knows what's going on. Big money is way smarter than I am. Big money has way more computers than I do. Big money knows a lot more and has a lot more experience than me. And us at Traders Ultimate Edge, we figured this out. We figured out that the markets were going to bounce back up here at some point. I mean, yeah, not like that's hard to predict, but that it would be relatively soon, right? We did it because we pay attention to fundamentals and we listen to the news. Big money knew everything we knew. They know more than we know. And if we knew it, you can be sure they knew it. They were just waiting for the right time to buy, and they bought at the end of the day on Friday. Again, smoking gun right here. Smoking gun. When big money steps in and starts to buy, that's when the markets start to move. Big money is who moves the markets. You know, yes, the retail traders obviously can have an effect. If they all get together and do the same thing, of course it's going to move. All of this, there's sellers and there's no buyers, of course it's going to fall. But as soon as big money steps in, they can do anything they want to do, and they did it. It shot it. They bought like crazy. So with big money stepping in here, I'm very confident. I'm very confident going forward, and especially watching all of the news and seeing all of the reports about Omicron, that it's mild. I think we'll have a good week. I think it's gonna push back up, and maybe not this week, maybe the week after. We need more good positive news about Omicron, but as soon as we get some real hard data that says, it's mild, oral treatments still work, I think we go right back to all-time highs, and there we can take our profits. I see that as kind of like a Santa Claus rally. I could see that. I could see that happening the weekend of Christmas. I could see all-time highs the weekend of Christmas. Hopefully sooner. Maybe 2 weeks from now, we'll see them. I think we need a little bit of data. We need some hard data on Omicron. As soon as we get some hard data, it's going to fly like a rocket ship. If you're not allocated, it's my personal opinion. Again, this is not financial advice. My personal opinion to go long here, and I've put a lot of money behind that bet myself. I think it's a great opportunity to buy the dip. All right, everybody, I love you. Thank you for listening, and I'll talk to you all tomorrow. Take care. Have a nice Sunday. Bye-bye.